Hey there, it's Cindy again. Welcome back to QuickBooks for Desktop 2023. We're starting a new section. This is section 12, and we're going to talk about how sales tax works in QuickBooks. There's a lot of setup involved with sales tax. You're going to have to tell QuickBooks which of your customers are subject to sales tax. You're also going to have to tell QuickBooks which taxes you're going to be charging your customers. We'll need to do a little bit of setup before we can start actually creating invoices and charging sales tax. If you do not do sales tax in your business and you want to skip ahead to section 13, that's where we're going to talk about payroll. Feel free to do that. If you don't do payroll through QuickBooks, then skip over to section 14, where we will be talking about the lead center. Right now, let's head over to QuickBooks and we'll start setting up our sales tax. There are several different things we need to think about if we plan on charging sales tax to our customers. The first thing is, make sure you live in a state that does charge sales tax. There are several states that are exempt from sales tax. The other thing is, the way sales tax works is you're only going to charge it on the physical items that you sell, not the services you provide. You need to check with your local county and your state to see which taxes should be charged in the different counties. Typically what happens is wherever you deliver those physical items, you're supposed to collect that county's sales tax. There's usually a sales tax for the whole state, and every county collects that. And then you want to collect for each county the different taxes that the voters have voted on. Sometimes you'll have a local option tax to fix roads. Sometimes there's an educational tax. There's just different ones, and you need to find out from your local sales tax office each county that you're going to be delivering items to. You need to find out what those rates are. If you just have a store in a single county and people come to you, you'll just have the rates that apply in that county. We've got several things we'll need to set up in QuickBooks. Let's go ahead and start with telling QuickBooks that you do charge sales tax. Let's head up to the menu and click on Edit and come down to Preferences. On the left, you'll see Sales Tax, and you want to make sure you're clicked on the Company Preferences tab. The first thing QuickBooks asks you is, do you charge sales tax, yes or no? Make sure that says yes. And then it will ask you to add some sales tax items here. You can do it here. We're going to do it over in the items and services in just a moment. But once you have those set up, you can come here and tell QuickBooks what your most common sales tax item is that you charge. And that way you only have to change it if you need to. This will make more sense once we get this set up. Right down in this section here, what's going to happen is some items are taxable, some are not. You'll see that at the very end of a line in an invoice, you can have a T appear if that item is taxable. And these are the different, what we call item codes you'll want to set up. There's non-taxable sales, and then over here there's one that says taxable sales. You'll see that here in a moment. As far as you forwarding that sales tax, once you collect it, you have to forward it to the appropriate entity. Some states you just send it all to the state, and other states you send it to those different entities. But this says, when do you owe it? Do you owe it as of the invoice date or upon receipt of payment, which is your cash basis? This bottom one means you wouldn't owe it until you actually receive the money for that invoice. This says, when do you pay it? Do you pay it monthly, quarterly, or annually? And typically you're going to pay it monthly. Depending on how much tax you collect, you may have a conversation with the state, and then you may pay it quarterly or annually, but typically it's monthly. Some of these options you'll come back and change after you've set things up, but I wanted you to be familiar with this because this is where you go to change those preferences. All right, I'm going to click OK and just get out of that. The first thing we're going to start with is we're going to set up our items and services related to sales tax. You're going to go right over here to items and services. And at the very bottom of this list is where any sales tax items or sales tax groups will show up. There is a type for this. When we set these up, QuickBooks is going to ask you, is it an item or a group? The way this works is, let's say you have a particular county. You're going to be collecting the flat rate that every county collects, then you're also going to be collecting the individual rates. If you're looking at an invoice, I'll just give you an example. It's going to ask you which sales tax rate are you going to charge this customer. If you've got these individual items set up, you can only pick one here. How are you going to charge your customer for all of these? The way that works is you'll set up all the items first, then you'll create a group, and you'll choose the group here on the invoice, and it knows those items belong in the group. That's how that's going to work. We'll just leave that up for now and go back to the item list. We've got some already set up for the exercise, but let's go ahead and set up some different ones so that you can see how this works. I'm going to right-click and choose New. The first thing we're going to set up is the rate that is charged across the board for all the counties, the state rate. You'll see here you have sales tax item and sales tax group. If you don't have these two on the list, it's because you didn't set it up in the preferences. Let's start with the sales tax item. And let's just call this one state sales tax. If you wanted to add a different description, you can there. And let's say the rate is 7%. There's also going to be an agency that you pay this tax to once you collect it and you forward it. Let's just say Department of Revenue. And we'll go ahead and click OK. Because Department of Revenue is not yet set up in the vendor list, you can quick add it, and then it will always be there. You can click OK, and now you don't have to worry about setting that up because it is already set up in the vendor list. So here's your sales tax rate, and you'll see way over here. Let's make this column a little bit bigger so you can see this. But you can see it's now set at 7%. That is the rate that's going to be charged across the board in every county. Now let's set up some rates for 2 different counties so you can see how this works. Let's go ahead and right click and choose New again. We're going to create a sales tax item. And let's say that this one is going to be a local option rate. Sometimes I'll just do L/O for local option. And that is used a lot of times for roads and things like that. And we'll just call it number 1. And we'll say this is 1%. And this gets paid to our Department of Revenue. And I'll click OK. Now you can see that one down here. You have your 7% and your 1%. Let's go create another one. Let's say there's also an educational tax in this county, and it's going to be 0.5%. We'll set up a sales tax item. This one we're going to call educational. This will be 0.5%, so that's 0.5, and it will go to the Department of Revenue. So now we have all 3 of these. Now let's say that all 3 of these are going to be charged to customers that are part of our first county. We're going to create a group. Let's right click and create a new. This time we're creating a sales tax group. And I'm going to call this one county number 1. In real life, you just name it the name of that county. Notice right down here where it says tax item, this is where you pick the items that belong in this group. We're going to have the sales tax for the whole state. We're going to have the local option number 1, and we'll have the educational tax. And that makes 8.5%. So that means when we charge our customer the sales tax, we're going to charge them the 8.5%, and QuickBooks will know this is the breakdown of those taxes. I'm going to click OK, and let's set up county number 2 now. County number 2 does consist of that same 7.5 for the state, so we don't have to set that up again. But they're going to have a local option tax that is 0.5% instead of 1%. Let's go set that up. I'm going to right click and choose New. This will be a sales tax item. I'm going to call it local option number 2. This time it's 0.5%, and it goes to the Department of Revenue. Let's say that's the only 2 taxes in this county. Now let's go ahead and group those two together. We're going to right-click and choose New again. This will be a sales tax group. Let's call this one County Number 2. Again, you would name that the name of the actual county. We're going to say this is local option number 2, and we're going to say this is the state sales tax. You can see this county, we're going to charge those customers 7.5%. I'm going to click OK. And now they're both set up. You'll see there's county number 2 and county number 1. Let me tell you something that I see frequently is when these are set up, oftentimes we'll see that county 1 and county 2 are set up, but they don't create the individual taxes. And that way, what happens is when you are on a customer invoice and you charge them, you'll charge them the correct rate, but you won't have the breakdown. And you need that when you go to forward the taxes because it will ask you how much goes to each county. Let's go ahead and stop the video here. We're about 10 minutes in, and we'll continue over in part 2. Welcome back to QuickBooks for Desktop 2023. This is Cindy again. We just completed working with Sales Tax Part 1. In Part 1, we learned how to set up the sales tax properly in QuickBooks and then how to apply that sales tax to an invoice. Once you've invoiced your customers and you've been paid, then you'll want to forward that tax that you've collected onto the appropriate agency. I want to show you how to do that correctly in QuickBooks. You'll be able to run reports to see who you owe, how much you owe, and then let's talk about how to properly put that payment in the QuickBooks register. Let's head over to QuickBooks and I'll show you how to keep going with sales tax. Now that we have our sales tax items and our sales tax groups already set up, let's go to the Customer Center. We need to tell QuickBooks for each customer if they're subject to sales tax, and if they are, which tax should they be charged. Let's start with Tom Allen. I'll just double click. You'll notice the third tab down on the left says Sales Tax Settings. The first thing QuickBooks wants to know is this a taxable customer, yes or no? If a customer is non-taxable, it would be someone like a nonprofit organization, or it could be that another vendor that sells similar products to yours has applied to the state for a sales tax exemption certificate. That means that even though they buy a taxable item, they don't have to pay sales tax because they're going to resell it in their store. If they've done that, they will have a resale number. You can actually type that there just for your records. We'll say in this case that Tom Allen is a taxable customer. And the next thing QuickBooks wants to know is, okay, which tax do they get charged? Remember here, you're going to pick one of the sales tax groups that you set up. That would include all of those individual taxes. Let's go back to Christy over on the list here. Christy is another one of our customers. She is subject to sales tax, but she will be subject to county number 2. And then we'll pick one more. We'll pick Robert Allard. Robert is a non-taxable customer. We'll pick that from the list. And under tax item, there is one that says non-taxable sales. If this isn't set up, go ahead and set it up. It's a 0%. Just make sure you set that up and then click OK. This will not go back to any of the prior invoices and change their sales tax rate. It's just any you create from now on. Let's head back to home and we will create a couple of invoices to show you how this works. Let's go ahead and start with our first customer, Tom Allen. We're going to use the kitchen remodel job. Notice the date is December 15th. We'll leave all of this. And let's go ahead and invoice Tom for framing. We'll say there are 10 of these. And I want you to notice this is a non-taxable item. Typically a service is not taxable, but if for some reason I wanted to charge tax on this, notice there's a drop down and I can change this. The next thing I want to do is charge Tom for a physical part that I'm selling. We're going to charge him for an interior door kit. We'll charge him for one of these and we'll say it's $750. And notice that is a taxable item. You'll notice because we changed Tom's tax status to say county number 1, It's reflected down here, and he's only being charged the $63.75 on the interior door kit and not the framing. Let's go ahead and click on Save and New, and we will create an invoice for Christy. We'll use Christy's Kitchen. We are not going to use the time that's available there. We'll go ahead and pick an item. We're going to pick, in this case, some cabinets. We're going to pick cabinet pulls, and we're going to invoice Christy for 15 of these, and they were $3.25 each. Let's go ahead and pick another item. We're going to use labor. And for labor, we're going to say there were 8 hours and it was $50 an hour. And now again, we have a taxable and a non-taxable item. Christy is subject to taxes for county number 2, that group. One more. Let's go ahead and choose Robert Allard. We're going to use the job remodel. We're going to pick installation. We're going to say there were 7 of these. We're going to use the rate of $50. That's a non-taxable item. And here's what I want you to notice. Notice that Robert is a non-taxable customer. I'm going to pick an item that normally would be subject to sales tax. We'll choose a door frame. We're going to say there were 1 of these. And this door frame is $275. Notice that that's normally a taxable item, but it came up and said non-taxable because he is a non-taxable customer. Notice he's not being charged sales tax. I'm going to go ahead and hit Save and Close, and that gives us 3 to work with. Once you have all of your invoices in, you're going to want to pay your sales tax. Sales tax is due by the 20th of the following month. You're going to get a little discount if you pay it early or on time, and a little penalty if you don't. That's all figured out when you go online to pay that tax. Before you pay it, you'll want to run a report to see how much tax you owe. If you go to Manage Sales Tax right here from the home screen, you can run a sales tax liability report. The first thing you want to do is check your date range. In this case, my invoices were dated in December. I'll go ahead and choose the 1st through the end of the month and then click down in the report to refresh it. And this is just letting me know that there were some invoices that we did, and that was for Robert Allard, that have a 0% rate because he was a non-taxable customer. You'll see right here in the middle, these are the taxes that we collected. In this report, you'll see your total sales, how much of those total sales were non-taxable, how much were taxable, your tax rate for each one, and then the tax collected. This tax collected is the most important column here because once you go online to pay that tax, it should be a little bit less than this if you pay it on time. If not, if this is $67 that you owe, but yet it came out and said you owed $120, then something's wrong. You need to figure out what you did. But you don't want to forward more than you collected. Now that you know how to run that report, we've got one more thing to do. I need to show you how to go and actually pay that tax. I'm going to go back to Manage Sales Tax. That was the icon we clicked on from the home screen to get to the Sales Tax Liability Report. There's also an option here to pay sales tax. You want to make sure that you're showing your tax through the correct date. Remember, show this through the end of December in this case. Anytime you change that, you have to click down in this section to refresh it. And your check date would be the following month. Let's just say January the 20th. If you're just paying this online, take out this check number, or if you are writing a check, make sure you have the correct number there. And all you want to do is go down the list and pay the taxes that it says are due for the different entities. This is how it's going to be broken out in QuickBooks. If you're getting a little discount, when you go online, it figures the discount for you. It's going to tell you how much for each one of these, and you can actually type that over here. When you're finished, go ahead and click OK. And that is how you pay sales tax in QuickBooks. Let's go back to the checking account register because I want to show you that it's actually in here already. Here's checking over here, or I can go to check register here, either one. It's going to be dated January the 20th. And if you notice right down here, we have a tax payment, the Department of Revenue, and there it is right there. If you double click on this to look at it, you'll see it will list all your different sales tax items that are part of that group or groups that you're paying. And that's how sales tax works in QuickBooks.
If you're not a subscriber, click down below to subscribe so you get notified about similar videos we upload. To see the full course that this video came from, click over there. And click over there to see more videos from Simon Says It.